This is Grok Trade 101 courses. Last but not least, this is part 6, Psychological Analysis for Traders. Our educational disclaimer: these are for educational purposes only. We are here to teach and educate you how to trade. We are not here to give you any financial advice. If you do seek financial advice for your securities, we strongly encourage that you seek out a professional financial advisor. Let me introduce you to one of our mentors, Mark the Meerkat, and also your host for these 101 courses. He's a mentor, a trader, an analyst, and also the host to our Grokstar trading chat room here at Grok Trade. And he has mentored over 180 traders and counting. He trades actively for a living, and he does it daily, so you are in very good hands. So let's get on with it, and let me turn you over to your host, Mark the Meerkat.
Hey, and thanks, Keisha, for all the nice introductions here over the last 6 lessons. Well, this is it, the last lesson together. This is number 6, the psychological analysis for traders. That's right, we're going to get into people's heads here a little bit. What are we going to cover in this section? We're going to talk about market psychology, personal psychology, trading mistakes that people make, and what are your next steps now that you've completed these 6 introductory lessons. Well, let's get right into market psychology. That's right, it's the mass psychology out there, the group think, whatever you want to call it. We're going to talk about crowd behavior and reading the sentiment on the charts. That's how we're going to use crowd psychology to determine which the sentiment is on the market. Which way are they thinking it's going to go? Now, it is the actions and the reactions of tens of thousands of traders out there that creates this crowd psychology in the markets. And the charts then just tell us it's just kind of a trail or a shadow left behind of what each trade or what we call a psychological event that it happens. And what are people believing is going to happen in the market? And that can drive price. So market participants actually drive the price action. Now think about this. If of all the people trading out there, if more of them believe the price is going to go up, what are they going to do? They're going to come out and they're going to buy. They're going to buy to go long, or they're going to, those that are short, if they believe the price is now going up, they're going to cover their shorts. But what if more people in the whole group believe the price is going down? Well, those who are holding it are going to want to do what? They're going to sell, sell, sell. And those who think it's going down, they're going to sell it short. So that drives the price either up or down. It depends on people's beliefs. If more people believe it's going up, it's bullish. If more people believe it's going down, it's bearish. And if it's about equal, well, that's when we have consolidation. Now, there's some market axioms out there. And what's an axiom? It is a proposition that is not susceptible of proof or disproof. It's just a truth. It's kind of assumed to be self-evident. There is a great deal of market psychology surrounding why these market axioms even exist. These things that happen over and over again in the market. You have no logical reason other than people believe it's going to happen. One of those, for example, is support once broken becomes resistance. So we're on support, 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 and then it breaks down below that area, and then when it comes back up, it stops where it was before it was support. This happens many, many times in the market. Now, traders witness this price level has acted as support in the past, and they believe it will then hold in the future, but once broken, they believe it will now hold as resistance. Another axiom is resistance once broken becomes support. Well, only because people think of that, and when they see it's going to get there, they then have it be support. Here's a good one. Gaps like to fill to the original level. Remember, we did a whole section in the lesson on gaps on the gap fill. It loves to fill based on this axiom right here. But people believe it's going to fill, and as soon as it fills, what does it do? It reverses around. It's because people are looking at it, and when more people believe it's going to happen, guess what happens? It reverses around. Yes, self-fulfilling prophecy. So here's one. Stocks always bounce off of the 200 moving average. Well, it does every time, except when it doesn't. But if more people believe it will, their actions will be in perfect alignment with their beliefs. So that is a bit of market psychology. Let's now get into your head as a trader, your personal psychology. Now again, this is just a brief introduction. This is probably one of the most important topics you can study as a beginning trader, but the one that you are least likely to hear and understand as a beginning trader. What two emotions drive most traders? Greed and fear. That's right, those are the two biggest emotions. And as you're a beginning trader, greed tends to drive you at first. You want to make money fast. That, and you want to get the perfect setup and the perfect indicators and oscillators to tell you exactly when to get in and when to get out, so you can make money fast. That's the huge focus, especially for beginning traders. And then, after you've been stung several times, then fear starts to set in. Let me give you a couple of examples. First one here, traders push the price up to extreme highs. Now you're feeling the strong urge to buy and buy right now, because it feels like you're being left out. So you start chasing the price, and you get into what we call a low probability trade. Rather than setting the trade, let the market come to you when the odds are in your favor, you're out there chasing it. It's because of greed. You're being left out. You're not making as much money as you think you could. Another example. You see the perfect setup that fits all of your trading rules, but you hesitate, and then you decide not to take it, and then it goes by. Why'd you do that? Well, because last time you traded this stock, you lost money on it. And that is fear. Fear you're going to lose this time. Problem here is you are thinking of the past and not at the present time. You don't look at the present setup as it is. The past is the past and has nothing to do with what the setup is right now. So why is the mental aspect of this so darn important? It's because hardly anybody comes wired to be a trader, quite honestly. We are geared to be in survival mode. That's the typical normal behavior of people, you as a human being. Because the markets are completely random events, but psychologically we strive for safety and order. The problem is the markets do not provide that. So fear starts to come into play whenever the randomness starts to appear. Now fear and greed can drive you then. Greed on the side that you just want to keep making money, and fear that you might be losing money. Whether you're a beginner or advanced trader, these emotions can drive you and take over and get in the way of your trading. Emotions, when trading, must be managed. I want to be very clear about this. We as traders have emotions. It's just that we need to manage them so that they don't get in the way of our trading. In order to do that, you need some proper training around that. Here's one more example. A trader who fails to exit a losing trade just because of the belief that the trade will eventually be profitable. Then it allows it to be a stinging loss. They have let the emotion of greed be their stumbling block. That's right, ladies and gentlemen. These emotions can get in the way of our trading. They cloud what we see. And at Grok Trade, we teach people to trade what they see. And if you have emotion in the way, you cannot see clearly. And greed, by the way, can be further distilled to just plain old fear. So what are some of the common trading mistakes that beginning traders make out there? Well, they try to predict the future. Because the markets are random events, we keep thinking we're going to know what's going to happen next. So we have an expectation, and because of that, it will cloud what we see. They enter a trade based on a hunch or a feeling. I'd want to trade only when the odds are in my favor, and I am not going to count on my emotions to tell me that. I want rational action, not emotional reaction. We enter a trade without understanding what your risk is. That's a huge mistake, and this is how accounts get wiped out or major chunks taken out of them, because we don't even know what the risk is when we begin. Having no trading plan for entry, stop loss, risk management, or how you're going to exit the trade. Major mistake. Because what are you going to do? Just get in when you feel like it, and when it hurts too bad, you get out? Or if you make enough money, you finally get out? When is enough enough? Unless you have a plan in place, it'll be completely random. So overcoming these mistakes, there's three major topics we want to talk about here. The first one is you've got to get a trading education. You need to know the right things to do. You need to learn to sort through the 7,000 stocks that are out there so you can only have a bucket of the best stocks to trade right now. And you need to learn to find the exact entry where the odds are in your favor to the penny. You'll know when that happens. And learn to buy the right number of shares and where to set your stop loss to control your risk. And to learn to manage your trade so you can minimize the losses and maximize profits. That's what we need to learn. Second major thing to overcome it is to develop a sound trading business plan. That's right, folks. Trading is a business. You need to treat it as that. Whether it's a part-time business or full-time business, you need to have a business plan. You must have a trading business plan, and you must know your plan. You got to follow your plan, because if you just have one and you don't follow it, it's not even worth the paper it's written on. And you have to have the ability to stick to your rules. There is nothing wrong with trading really small to build confidence and to test your trading system until you are consistently winning more money than you're losing over time. It comes down to this: plan your trade and trade your plan. That is a rational, logical way to trade. And then as far as personal psychology, some personal goals of a consistent trader that you can be setting for yourself. To continually strive for patience, perseverance, discipline, determination, and rational action versus emotional reaction. See, rational action comes by having a set of rules and by following those rules. And those rules are best placed right into your trading plan. And the last thing, and this is important, folks, you can underline this one in your notes: trade expectation-free and trade emotion-free. These are huge, because if you come in with expectations, you won't clearly see what's happening, and if you have emotions, you can't clearly see what's happening. Well, that brings us to the end of this 101 on this psychological analysis for traders. Again, brief introduction here. Now, let's look back here for a second. We talked in the first lesson about the fact that this 101 course is a basic introduction as to what trading is. And we covered these 6 different topic areas. And now I want to emphasize that the 101 course is not a complete guide on how to trade. You just have the tip of the... No, you don't. You have just the snowball on the tip of the iceberg of what you need to know in order to be a savvy, winning, consistent trader. And then back in that first lesson, we also asked, why trading? What's in it for me? And you need to define for yourself, what does financial freedom look like? Is it just so you can augment your income? Or is it you want to save for retirement or save for a college education for your children? Whatever financial freedom is for you, you need to define that. And what about personal freedom? Why do you want to trade? What personal freedoms will that provide for you? You need to define those and then be striving towards that. Is it so you have more time to spend with family and friends? Or is it so you can have more options in your retirement? You need to define those freedoms for yourself. This is your last chance. You are at a very critical point in your journey right now. We've completed the 101 basic course now. So this is now time to make a decision. The decision is, are you going to become a savvy trader? Are you willing to do what it takes to become a winning, savvy trader? Or you're going to choose not to trade. This is your decision point. Now, we would like to recommend that you get mentored. You're now just getting some of the basic information. You need to have the right information, and you need to have someone to walk with you as you implement it in your trading life. If you get mentored, you will become a savvy trader. You will trade the markets with confidence, and you will reach your full potential as a trader. What's your next step? And we've already talked about this, and that is to enroll in the Meet the Mentor. It's just a brief webinar to describe what the mentoring program is and how it might be of benefit to you. Go to groktrade.com, that's right, groktrade.com, and you can sign up for one of those Meet the Mentor webinars. Again, they're brief. Or you could just skip that and go right to contacting us, that you want to have a conversation, just a conversation about your trading and how this mentoring program might help you in your trading. You can go to mentor@groktrade.com, mentor@groktrade.com. Just send an email, said you'd like to have a discussion regarding the mentoring, and we'll set up a time to have a phone call with you. Well, congratulations. Can you believe it? We've gone through all 6 lessons: foundations, infrastructure, tech basics, charting, gaps, and psychological analysis for traders. You have now completed the course. That's right, this introductory course to trading. Now, become a savvy trader via our Grok Trade Mentoring Program. It has been my honor to be here with you the last 6 lessons, and I hope to see you in mentoring. This is the Meerkat. One more time. Learn to trade well.